The wheat market was off and running on supply-side concerns that helped corn work to the upside, while the soy complex firmed on support from some fresh export demand. Beef demand continues to limit selling interest in live cattle futures, and lean hogs work to catch up with the work that the cash market has already done.
Live, we are off and running via Farm Journal broadcast. This is AgriTalk. This afternoon, it's a conversation with DuWayne Bosse from Bold Marketing. Later, Cary Artac from Artac Advisory and WickedStocks.com. And directly following the news, Jack Scoville from the Price Futures Group. I'm handsome newsman Davis Michelson. Now, here's the host of AgriTalk, Chip Flory.
All right, Davis. Hey, thank you so much. Welcome to AgriTalk. Glad that you are with us on this Monday afternoon. And, dude, it is a dreary fall Monday afternoon here in Northeast Iowa.
Yeah?
I don't know if I can keep up the energy, dude.
It
I don't know if I can do it.
It sounds like you may have already given up the fight, brother.
Well, you know, it seems to be winding down here pretty quickly. I don't know what else to tell you. It's just...
I got this. We got a great show for you, everybody.
We've got
it's going to be a
DuWayne
fantastic
on the
show. You're not even going to believe it. Yeah.
I'm so looking forward to it. So looking forward to the conversation with DuWayne.
Yeah.
He is doing some farming today, by the way.
Okay.
Davis. DuWayne is. DuWayne's doing some farming, and we are going to learn about some of the farming that he is doing because it's going to be interesting. People are going to find this, I find it very interesting, so I would hope that you will find it interesting as well.
When I hear you say something like that, it makes me want to stay tuned in for the entirety of the hour, Chip.
For the entire show? Really?
Mm-hmm. Yep.
Does
the whole
it?
Thing, top to bottom. Yeah. You betcha.
The plan is coming together. All right.
Cloudy down here in KC too, man. We got the rain happening, and I kind of know what you mean.
Yeah, absolutely. It's it is a day, good day in the wheat market, soybean market, corn market, cattle market. Yeah, hogs okay. I mean, we'll call it a good day. But that doggone cotton, I didn't even mention it. It closed mixed, and the December contract was lower after just getting flushed on Friday. Tough setup there in that cotton market right now. All right, let's get to the markets. What do you got, buddy?
Well, Chip, wheat futures were solidly higher with support from the escalation of Russia's war in Ukraine. U.S. President Biden gave the go-ahead to Ukraine to use long-range missiles to potentially counter Russia's move to bring North Korean fighters into the conflict. The threat to exportable wheat supplies from the Black Sea is back as a feature for the wheat market. The U.S. dollar also traded sharply lower to help support late-session gains in wheat futures. Export inspections of wheat in the weekend of November 14 totaled just 196,000 metric tons. That was well below trade expectations. December soft red winter wheat futures traded higher for the entire session and posted a low-range open and a high-range close. December HRW wheat futures today 15 1/4 cents higher to 5.55 1/4. December SRW wheat up 10 3/4, 5.47 1/4. Still waiting on the final settlement on spring wheat at last report, up 12 1/2 cents on your December spring wheat. That's at 5.84 3/4. Chip,
doesn't it feel like this thing? And I mean, it's already out of control. I understand that, but bringing North Korea in and authorizing the use of long range missiles. I mean, this feels like it's spinning. Out of control. I'm not overstating that, am I?
I don't think so at all. I think that these were what we might call fetters, which have now been loosed. Which potentially could exacerbate the situation.
Right.
For sure. Well, let's go to corn. Corn export inspections weekend at November 15 totaled 821,000 metric tons. That was in line with trade expectations. Total corn shipments are 31.9% ahead of year ago compared to USDA's estimate that exports will climb just 1.4% from a year ago. Corn felt spillover support from wheat, with selling limited by ideas that China will likely increase corn imports ahead of the inauguration of President-elect Trump. December corn opened slightly lower and near session lows, closed at session highs. December corn futures 5 1/4 cents higher at 4.29 1/4. March corn up 4 1/2 cents, 4.39 3/4. July corn futures closed at 4.50 even. That's up 3 cents today. Chip?
Yeah, I thought that, with double-digit gains in wheat like we got, that corn might even be able to perform a little bit better than what it did. But D's corn just feels really comfortable at 4.30 is what it looks like to me.
Yeah. Well, soybean export inspections totaled 2.17 million metric tons. That was also in line with trade expectations. USDA this morning also announced the sale of 261,000 metric tons of soybeans to Mexico, 30,000 metric tons of bean oil to India, and the sale of 135,000 metric tons of soybean meal to the Philippines. That demand-side effort was offset by word that Brazil has now planted 80% of its bean crop. That's well ahead of the year-ago pace. South American rainfall will be a mixed bag this week, although some key areas are expected to be mostly dry over the next 10 days. January bean futures opened higher, dropped to trade moderately lower, and then recovered to close near session highs. All told, January beans 11 1/4 cents higher today at 10.09 3/4. March beans up 10 1/4 to 10.19. July beans closed at 10.42 3/4. That's up 8 1/2 cents. Chip?
All right, yeah. December soybean meal today up 70 cents, 2.90.30. And December bean oil today up 17 points, 45.52. Let's go ahead and go to Jack Scoville, Price Futures Group. How you doing, Jack?
Doing great. How about you?
Not too bad. D's corn feels like 4.30 is a comfort zone for it. Do you agree with that?
Yeah, it sure does. I thought personally it could go a little bit stronger than it did, but it seems pretty content to hang around here. Where there are worse things in life, it's still a pretty decent price. Seems to be attracting enough selling interest from the part of the producer and enough demand from the part of the user to keep the prices pretty stable. But looks like both sides pretty matched up.
Yeah. Yep. Well, it's what the market's supposed to find every day, right? The price that gets
well,
action.
Yeah, it is, and looks like corn's kind of pounded for the minute, But it is what we're after every day. After all.
That's right. That's right. Okay, tell me about this bean trade. What did you make of it?
Well, I thought the beans acted great. One of the reasons why I thought corn could work a little higher. We did some business with Mexico, India, and Philippines today, so that really helped. And to me, the bean market really kind of took off on the export news. Really was kind of languishing before the news came out, but really kind of took off after the news, and then it just never really stopped, never really settled back real well. So I thought the demand news was very positive, and if we can keep it up, we can keep this market strong again.
Yeah, boy, we got to watch what's happening in the Black Sea region between Russia and Ukraine and North Korea now, don't we?
Yes, we do, and that was responsible, I think, for a lot of the wheat rally today, because wheat wasn't doing anything much either. But so with Russia and Ukraine and the U.S. allowing longer-range missiles to be used and North Korea coming in, looks like the situation's getting hot again.
That's right. That's right. Good stuff, Jack. Thank you. Jack Scoville, Price Futures Group. DuWayne Busse's up next here on AgriTalk.
I don't know what you're thinking. So call us at 855-4TALK-AG and tell us what's on your mind.
Welcome back to AgriTalk. I'm Chip. We are going to get to the conversation with DuWayne Bosse here in just a moment. But first, Davis, let's go ahead and finish up the news.
Quickly here, I've got December cotton today, 18 points lower, 66.62. On your livestocks, heavyweight choice graded boxed beef jumped $4.48 this morning, helping nearby live cattle futures turn mixed mid-morning trade into a solidly higher close. December fat cattle were $1.15 higher today at 184.10. February futures up 72.5 to 185.97 1/2. January feeder futures up 227 1/2 to 249.50. And on the snout side, lean hog futures remained at a steep discount to the cash lean hog index. December lean hogs posted an inside trading day. Dece hogs 52.5 higher, 80.02 and Feb hogs up 37.5 to 83.27 Chip Flory.
All right, thank you very much, Davis. Yeah, choice graded heavyweights, $4.48 higher. Now movement was pretty slow, just 65 loads, but when we've got the choice up 448 and the select down $1.09.
Yeah.
And the choice select spread now out to 32.77. They cannot get enough of the choice and prime beef. It's crazy.
I will say I was spotted at a local steakhouse here over the weekend. That might have something to do with it.
That could have.
I get a lot of that
to do with.
Yeah.
Yeah, you pulled down the demand. You pulled down the supplies enough or something.
That's right.
Like that, didn't you?
That's right.
Wow.
I did.
Good for you.
No regrets.
You. DuWayne Bosse, Bolt Marketing, Britain, South Dakota. How are you, DuWayne?
Hey, Chip, I'm doing great. How about yourself?
Well, doing just fine. I helped out with the beef demand a little bit. Maybe more than a little bit this weekend too. I hope you had a chance.
Oh, it's a funny thing you brought that up. Yeah, we did as well. We went out with a group of friends to a local steakhouse where the ribeye that they bring out, the one guy next to me started laughing right away when he saw the size of it. And something about losing your manhood when you can't finish it all. But when you go to this place, I just know right away, this is a couple meal deal here. So yeah, I kind of ate steak all weekend long.
Nice. Yeah. I like it when that plan comes together right there. How you been? Everything okay?
Yeah, everything's really good. What a great fall. Man, as a producer, it was just the best. Harvest went great. Up here, we even got tillage work done. I finished up this morning, and I can never really say I finish up. I'm in Northeast South Dakota. Usually the weather stops me. Ground gets hard, and I can't till it anymore, and it just tells me that I'm done. But I can say I'm putting equipment away after this, and kind of just ready for winter, I guess. As ready as I'm going to be anyway.
Gotcha. Okay. Tell us about what you were doing this morning.
Okay. Well, it's
Come
a little
on.
embarrassing.
I love this.
Oh,
Number
God.
one, because I've walked through some of that stuff up there, pheasant hunting, and I'd rather see it growing crops.
Well, that's just it. I sent you an email because I thought, well, geez, I don't know where I'll end up at if I'll be on the phone or back in the office. But what I was doing is disking under cattails. And if anyone knows what cattails are, they're a disgusting weed that I have up here that grows in all my wet spots. Now, great for pheasants, great for deer hunting, which I like that as well. But you're right. We've had a lot of that's been growing up over the last couple of years when we're wet and we can't produce anything off of it. So I pounded them down with a construction disc, and that left it about as rough as you can imagine. So today my job was to go across with a little vertical tillage and just try to smooth it out so I don't break my neck next spring, I guess.
Yep. Now, when was the last time that those acres grew a crop?
Oh, it has been a while. For some of them, maybe close to 10 years in some of the spots. On my farm, actually, we're over 300 acres. I think it's 375 acres that are actually don't even qualify for prevent plant anymore. Remember, they'll pay you 4 years of not growing a crop. So yeah, this is some lowland. Now, you got to remember where I'm at. We're called the prairie pothole region. So the water just sets. It either has to go up in evaporation or down, or make really good pheasant hunting for guys like Chip Flory. That's the other thing. So it's with the drought this late August and fall, we're being able to get back in and work these areas. So great. And it does kind of raise up the idea of, we can get this planted next year. That's some acres we haven't planted on our farm for a while.
Right. Now it's 375 acres for you. Now, but you multiply that, and I mean, if it's working for you, it's working for other guys. Other guys are doing the same thing, aren't they?
Oh, absolutely. I mean, it is an interesting point because, and it's kind of just the key in my area, so I don't mind reporting on this prevent plant stuff. Not that I'm proud of it by any means, but whatever.
Yeah.
this year we had 4.72 million acres of prevent plant in the U.S. Now, like I said, some of my acres didn't even qualify for it anymore, so that even number gets a little higher. But if everyone's doing this fall, we could drop that prevent plant acres down well below 2 million. And all of a sudden, we've got 2 to 3 million more acres that could go back into production up here. Now, I know this isn't Illinois and Iowa, but boy, our yields are bumping up higher all the time too. And at a spring when we maybe don't need all the acres, we might just be able to add some to it. Now, I say all that, and my wife, if she would be listening, would be cursing me out because she knows I'm going to get horribly disappointed when we get a 4 to 6 inch rain next spring and all this stuff goes back to water. But luckily, I don't think she's listening this afternoon. I'm sure she's always a great listener of this show, but maybe she'll miss it this afternoon, so I won't be in the doghouse right away.
Oh, my goodness. Okay. The reason I wanted to bring it up is it does give me some things to, and it should give everyone some things to think about. Number one, the swing acres that we're looking up in North Dakota and South Dakota. If you're looking for a definition of swing acres, that's where you find them, is in the Dakotas. Number two, when we've gotten to the end of the season here over the past couple of years, there have been many that have said, boy, I can't believe I thought we'd have more prevent plant acres. Well, some of those acres had maxed out on their prevent plant designation, I'm sure. So that might explain some of that. And now for next year, here we've got some of those acres coming back. Game changers? I don't think so. Could it make things lean one way or the other, DuWayne?
Well, yeah, I think so a little bit. Like you said, not a game changer, just it's something different to talk about and consider when we think about this trade. And like you said, the swing acres, almost everyone you ask in the I-states are going to say they're sticking to their rotation. Up here,
right?
Oh, our rotation goes left and right big time. And for my farm, we're hoping a lot more corn acres next year.
Right. Okay, hoping a lot more corn acres next year. Is that because that's what these acres do best that you're bringing back?
A little bit of both. We were strong soybeans this year, so our rotation will push us back to strong corn. But honestly, it seems like up here we can yield really well in corn. Soybeans, we still struggle just a little bit. But maybe that's me being a really short-term memory. The soybeans struggled up here with the wet feet early on and then drought late.
Yep. All right. What do you make of how the markets are trading right now, DuWayne?
I like today a lot more than I liked the entire week last week. I can tell you that much. And it's funny to me how quickly things flip and change. Last week it felt like there wasn't any bullish news that could turn the market. And while, you take 2 days off and we're launching long-range missiles over in Ukraine and Russia's sent over 100 missiles, I think. And all of a sudden we got maybe a little bit of war premium that needs to be added back in wheat, and funds are buying corn, and soybeans decided to even join the party late in the day. So I love the way we closed today on everything. All the charts look good as well. Okay,
funds are buying corn. Is that short covering or is that new longs?
That's actually new longs coming in. I mean, for the past couple of months, it's been covering shorts, right? They weren't quite record short, but they had just a massive amount of short positions. And I always thought, well, if we can give them some reason to cover those shorts, they'll buy the market. And with the volume they do, they'll get us up to a decent price to sell. Well, they did all that and then went long 100,000 contracts. Now, sadly, the market hasn't moved a lot, but I really, really like playing the side of the game wherever the funds are thinking. And I doubt they're going to go long 100,000 contracts and then decide to just sell them all back either. So this weekend, I got kind of friendly the corn market.
Okay. The corn market, but not soybeans?
I'm kind of like everyone else when it comes to the soybeans. Now, I really like what happened today. So short term, I'm going to say that we could have a bit of a rebound here. It looks like we should, following everything else. But I'm kind of like everyone else. Longer term in the beans, Chip, man, those world stocks are problemsome. And I mean, we've got big, 10 to 20 million metric ton increase this year. Next year, we could have the exact same thing. So I'm a little worried about soybeans.
All right, man, we got a lot more ground to cover. I can't believe that segment has gone on us already. We are in the middle of a conversation with DuWayne Bosse, Bolt Marketing up in Britton, South Dakota. When we come back, I want to talk a little bit more about that balance sheet on both corn and soybeans. We got to throw wheat and cattle into this combo too.
Let's go to the markets page at profarmer.com and check today's closes, where December HRW wheat futures were 15 1/4 cents higher at 5.55 1/4. December SRW wheat up 10 3/4 to 5.47 1/4. December corn futures 5 1/4 cents higher at 4.29 1/4. March corn up 4 1/2 cents to 4.39 3/4. January soybean futures 11 1/4 cents higher at 10.09 3/4. March beans up 10 1/4, 10.19. December cotton today was 18 points lower at 66.62. On your livestocks, December fat cattle $1.15 higher, 184.10. Jan feeders up 227 1/2 to 249.50. And Dees lean hogs 52 1/2 higher at 80.02 1/2. Get more market news every market day. Visit tryprofarmer.com.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. Our name says it all. AgriTalk. What more do you need to know?
Hello. Are you okay? Is everything all right?
Are we there? Is this thing on?
Yes. Welcome back. Welcome back to AgriTalk. I'm Chip. That is Davis. Everything's looking good out there. I think we're okay. Okay. We are in the middle of a conversation with DuWayne Bosse from Bolt Marketing up in Britton, South Dakota. Let's get him back in here. Talk to me a little bit more about how you see the balance sheet on corn playing out. Here we are, November. We got do I call it a bigger than expected cut to the supply side of the balance sheet? And then they made no changes on the demand side. Did that surprise you at all?
Yeah, that did surprise me. And it disappointed me as one of the bulls on the corn market, because you start to wonder, our export pace is phenomenal, right? It looks like we're far going to exceed USDA's current demand forecast of 2.325 billion bushels. But the fact that they didn't change it makes you wonder, well, does USDA know something we don't? Do they know that this is all front-loaded buying, pre-election, pre-Trump getting into office, and then it's going to pull back? But I don't know. I got to increase them a little bit more. I'm at 2.435. So, and it's not just a little bit more. I have export demand quite strong. South America really doesn't have any exportable corn right now. Ukraine, we briefly talked about the issues they have there or might have moving forward. So I kind of think we're the only game in town. And Chip, if I increase demand that much, my any stock dips below 1.8 billion, which starts to get friendly. But we really have to remember, we just got done with harvest. We're not running out of corn in the Midwest right now. This is probably more of a spring story than anything. And then we'll counter that if I'm getting more acres planted, I guess, up here.
Gotcha. But so that would put your total use up there around what, 15.1?
Yep, dead on, 15.175. I know that sounds crazy high, but I see feed and residual high. I see ethanol high. Corn prices are too low for all producers, but I guess it's low enough for demand to increase a little bit. At least I think so.
Well, it's one of the jobs of the market. So carry over 1.8 billion?
1.785.
Okay. So 1.785 divided by 15.175. You're looking at, you're starting to get the stocks to use ratio down, but it's what is it, 11.4%?
Yeah,
it's still not crazy bullish, is it?
It doesn't scream $5 corn. And actually, I'm just a little bit nervous that you're writing that down. That hinders on when I come back on the show or not. Usually I do presentations. People write things down. I want to stand at the door and take it away from them as they leave. But that's my numbers for now anyway.
I know the feeling. Yes. No, I was just trying to put a little perspective on it.
Yep.
because it's going in the right direction, but it's still got work to do. And I love the way that you explain, explain the situation. It's not screaming $5 corn, but it doesn't scream $4 corn either.
Well, right. And then when you look at a chart, it kind of makes you feel a little bit better about we've probably seen the low. And I love that the funds are buying. That's really probably still the number one story to talk about, because they just have so much power. And if they decide they want to go long 300,000 contracts, it doesn't matter if I don't agree with them or not. They're going to probably move the market. Now, the negative side of it is we have farmers out there that are very undersold, and these rallies, as the funds buy it, farmers will be natural sellers in the market moving forward. But I mean, I think we can let's shoot for somewhere in the middle, that 450 in a March contract, 475 for July delivery corn. But you get to there, don't get bullish on me. I think that's where we really got to reward this market.
Yeah, good perspective right there. Okay, do the same thing on the soybean balance sheet for me. What are your thoughts there?
Well, or we could just skip that and just have a good show. No, just kidding. And this is where I kind of struggle, because my soybean outlook is fairly bearish. I mean, one, I was really surprised with that cut in the yield. I mean, I know it was a horribly dry fall, so that lost some yield. And then, the moisture of the beans coming off maybe made for a bigger cut than even I realized. But anyway, we lost 121 million bushels, the last USDA report from production side. But on the demand side, it's still a question mark. I think a big question mark. I mean, USDA is at 1.825 for exports. I'm at 1.750. I think these beans were very front loaded. Actually, the Chinese officials have been very honest about telling us they've been very front loaded. And I think they're going to dive off pretty hard, especially if the weather's good in South America. So my ending stock is still above 500 at 528. But here's the good thing, Chip. It was 600 plus just before we had the production cut. So it's not as bad as it used to be, but it's still not good. Right.
Tough to anticipate much of a sustained price strength out of that. That is for sure. We talked about it with Jack at the start of the show, but the situation in the Black Sea region has got to be back on everybody's radar after, like you said at the start of the conversation here, DuWayne. But it's got to be back on everybody's radar at this point, isn't it?
Well, I think so, especially after today's trade action. Last night, watch the markets open and see the news, and you think, wow, wheat might shoot up 10, 11 right away, and it just didn't. It was pretty quiet. And this morning, I started to think, well, I get it. Wheat is so tired of that Russia-Ukraine war as far as being a headline story, but the what happened and how it escalated this weekend, and then Trump saying that he's going to end the war when he gets in, is a little bit mixed signals. So I think we got to build maybe just a little bit bigger war premium in here. It's going to make the market at least a little bit nervous. And maybe what it did too is it just made those contract lows hold, which I'm fine for that too. So now the chart looks a little bit supportive as well.
Okay, how important is it that wheat participates in any kind of a price rally at this time of the year, DuWayne? I mean, can corn go without wheat?
That's where I struggle. Everyone asks me, individual, like the corn market, and I can spout off what I just told you. But the problem is that it doesn't trade by itself, does it? And I'm really struggling with, I've got corn going higher, but I got beans going lower. And that doesn't happen normally. So I guess I should be half right at the very least here. But I do think, back to your question, I do think we need wheat to rally as well. It's a feed wheat. It can be used for feed. So if wheat prices are that much cheaper than corn, we'll just feed a little bit more wheat. But I don't know. Guys get really comfortable in their feed rations too and don't like flipping back and forth. But it's just a general rule of thumb, and all the spreaders out there in the trade, we're going to want wheat to rally with corn to get it up to those levels I was talking about.
Yep. Okay. We felt good about the way the corn market traded today. We felt good about the way that, all the markets traded today, including soybeans. Now, I felt like beans and the products could have done a little bit more after getting a dose of demand in that export sales report this morning. But like you were saying, it's a little bit not enough and too late in the game is what I hear you saying there on the demand side, DuWayne. Is that right?
I just a little bit anyway. Yeah. That's the crop that I tell everyone, do not pay commercial storage on. When you get a rally,
Okay.
hopefully everyone sold it last week when the market was up. And if we rally back up to that level, everyone's looking at the same thing on a chart. Looks like a possible bit of a head and shoulders formation there. You get a rally back to 1050, no matter what the reason is. I like selling it. Don't like paying that storage. Even on-farm stuff. I sold a big chunk of ours last week on farm. It's funny. You get quickly after harvest, you can get a basis pinch here and there. And if somebody's willing to buy it, remember, our job is to sell the commodities eventually. You can't just hold it forever.
Yep. That's a great perspective. Great perspective. Usually the best time to sell something is when somebody wants to buy it. And if you're getting that basis push, you might as well grab it and take advantage of it. All right. Cattle. Talk to me about cattle. What's your thoughts?
Yeah, about like the grains last week, I was really disappointed, leaning kind of bearish. I was kind of just looking at the seasonal trade. It usually struggles into Thanksgiving, the first week or two of December, and then maybe we start to come back. But boy, feeders out of the blue on Friday, at least I sure didn't see it coming, are up $4 and look strong as heck. But, I quickly thought to myself, like, well, feeders were at too much of a discount to the cash anyway. So I felt like they had to rally to catch cash. Now today, another rally today on top of it. That's always good when you see continued buying. Now we push through some chart resistance, man. And if feeders are the leaders, maybe we put in our seasonal low a little early and live cattle can follow here. I love cutouts. We're up $4 at midday. Boy, it just looks a whole lot better than it did a week ago, Chip.
I cannot believe that these Jan feeders have put on, what is it, like $6 in no time at all. $5.50, $6 in no time at all. And like you said, broke out to the upside in that market today. This thing, the feeder market, it acts like it is. It acts like it's off and running. I'm not exactly sure what to make of it. I don't know. With corn rallying, with corn moving to the upside, and we got feeders doing this, I don't know which one to trust and which one not to.
I know, right? But that's back to the whole, if I could just trade them individually by themselves, I would feel better, but they don't trade that way. But you're right. I mean, man, just last Monday, January feeders hit a low of what, 239.90 or something. So, I mean, yeah, we're up $10 since then. So amazing. Yeah. But the cash market is so white hot. You get corn even this cheap. Guys would rather, I've heard you say before, walk it off the farm instead of selling the corn. And so, I mean, cash feeders are going to be white hot and stay that way. So I agree with you. You look at this chart and the breakout today, I don't want to say go back to contract highs, but it has that potential anyway.
Gotcha. DuWayne, I always enjoy this, man. Thank you so much for making time. Be safe out there. We'll talk to you again soon.
Thanks for having me, Chip.
You bet. DuWayne Bosse, Bolt Marketing, Britain, South Dakota. It's Monday. That means it's time for an update from Cary Artac. That's coming your way next here on AgriTalk.
If the world is your oyster, we've got pearls of wisdom on AgriTalk.
Welcome back. Glad you're with us. Man, that was a good conversation with DuWayne. Just
there you go. See? You got your mojo back. Yeah, you're all set.
See? There you go. You're exactly right. And I was going to complain about the fact that it looks like it's 6:30 at night outside right now. I shouldn't. Seriously?
Well, no, it'd be
not
dark.
6:30.
Yeah.
It would be really dark, wouldn't it, by 6:30?
Looks like it's 4:30 out there right now.
Yeah. Oh, that's so bad.
It's been a long day.
Yes. Okay. So we finished up conversation with DuWayne there about January feeder cattle. And I know we're going to kick off the conversation with Cary Artac from Artac Advisory with January feeder cattle. Cary, how are you?
I'm great, Chip. Thanks for having me again.
You bet. Glad you're here. Don't forget, if you would like to take a look at the work that Cary does on the commodity side, go to artacadvisory.com, ARTAC Advisory. And on the stock side, go to wickedstocks.com. All right, kick us off, Cary.
Yeah, January feeder cattle. I'll start right there. Been bullish this market for the last couple of months. We did have we had a long-term sell signal about 2 months ago that played out for about a week before we sort of reversed, closed back above channel support. And, in my book, a failed long-term sell signal is in itself a valid sign of mid to longer-term strength. That's been we've seen this play out now, especially the last couple of days. So, following that, holding above 241.37, and that is the base of long-term support. We've been above it for the last couple of months. I've been mentioning how the January contract could actually push into the lower 160s by its expiration. And the broader market, the back contracts, still, as we continue into spring, summer of next year, in reach of the mid to upper 160s, 165 and a quarter, 168 and a quarter. And that remains all true. What's played out over the last 2 days is a buy signal on the daily chart for January that is now present above 243.50. So we closed today at 249.50, that 241.37 to 243.50 area, well below the market now, able to contain selling in a January expiration, broader market selling through winter, above which January should reach 153.40 over the next couple of weeks, possibly next couple of days with what's been happening, and 163.42 in reach by January expiration. If we close this week above 153.40, that 163.42 is likely inside of 2 to 3 weeks, where Jan could actually top out into its expiration. So that is the big picture to the upside. Now, if over the coming weeks we were to collapse back, settle below 241.37, everything shifts south for the broader market, 225.50, then a 2 to 3 month downside objective. And we could, as we continue into spring, summer of next year, fall as far south as 209.50. But, those are the downside possibilities if we close below 241.37. Until then, we're in a stable to bullish long-term cattle market. February lean hogs, we're just in the process now of rolling out of December and into February. And the way I see this shaping up is that we've got this kind of wide sweeping two-sided framework for not only February, but the broader market into February expiration. We've got 86.90 overhead long-term resistance dropping weekly into the 82 handle by the end of the year. And then we have a channel bottom that is about a 4 or 5 month channel bottom at 73.87, well below the market. So that is our wide sweeping sort of 13-point range that narrows gradually. And inside of that, I've got 79.67. And that 79.67 level can contain selling really into February expiration. So it's kind of getting deep in the weeds here, but holding between 79.67 and 86.90 is a two-sided framework through the rest of the year. If we close below 79.67 over the next few weeks, then we test that long-term support at 73.87. 73.87 is significant. It is the point that can contain selling through winter. And if we were to close below 73.87, we then enter a long-term bear market that by next summer could yield the mid-50s, 55.50. The inverse is true with 86.90. So the way I see it, over the next few months, this market's going to tip its hand. It's going to be a big move, I think, well into next year. If we can close above 86.90, dropping weekly into the 82 handle by the end of the year, if we can close above that, I see a nice rally playing out, 95 even, a 3 to 5 week objective, but the 115 handle wouldn't surprise me as we continue into next summer. So bottom line, bullish above 86.90 long-term, bearish below 73.87 long-term, and inside that is a sort of two-sided framework midterm, really through winter trade. And finally, Tesla is the stock. I mentioned Tesla before. I'm repeating again because following the recent rally that we've seen, we are right at the edge of a significant buy signal that could play out well into next year. It's 337.37. We're trading right about there right now. They announced, the Trump administration, the incoming administration did mention the relaxing of standards for auto driving. This is obviously beneficial for Tesla. And so if we can close above 337.37 at the end of this week by a 1% margin, that is 340.75 or higher. I see 414.49. That's the November 21 high within 2 to 3 months, possibly within 2 to 3 weeks, and 500 even over the next 3 to 5 months if we can close at 340.75 or higher. Until then, this is a significant ceiling of resistance where we could actually top out through the rest of the year below 337.37, expecting 275 even over the next 2 to 3 weeks realistically, and over the next 2 to 3 months we could ease all the way back to 235 even. So this is a volatile, wide swinging stock. Tesla, and you jump on board the long side with a settlement this week at or above 340.75. We've got gains of 50% roughly over the next 3 to 5 months.
That's a potential big move right there. Yeah, that's plenty. That is plenty, Cary. Good stuff, man. Thank you so much.
Thank you, sir. You have a great day.
You bet. Cary Artac, Artac Advisory, wickedstocks.com. National Weather Service 6 to 10-day outlook, November 24th through the 28th. Below normal temperatures in the Dakotas and far northern Nebraska. Near normal temperatures, most of Minnesota, western Iowa. And then above normal temperatures expected eastern Iowa, Wisconsin, and points to the east and south of that. Above normal precipitation also expected across most of the Corn Belt. You got to get down into Kansas and the Panhandle to see near normal to below normal on the precip. 8 to 14 day, November 26th to December 2nd. Below normal temperatures making their way into Wisconsin, far western Illinois, all of Iowa, northern Minnesota, and above normal precipitation. Thank you so much for listening today. Come back tomorrow morning. Lee Blank, Summit Carbon Solutions.